We are back from break with more Lowcountry Money Talk, and we have had, well, I'm going to say some fun on this show so far, Phil.
Sure.
What do you think?
I like it. You know, we got to keep it a little light but informative as well.
It is. It's incredibly informative. In fact, my notes are piling up on me here as I'm learning from you. But we were talking about Social Security earlier in the show. We've just recently flipped to really talking about current events and the stock market and what this might mean for you, especially if you are retired or nearing retirement. A couple of the things we've touched on here, obviously, is, you know, the Russia situation pushing up gas prices. Everyone's talking about gas prices.
Sure.
We're all talking about inflation. You know, we just had our Super Bowl parties. The meat was more expensive. The alcohol was more expensive. Getting in the car to go to the friend's house was more expensive.
Absolutely.
So talk to us about that. What is this meaning
Well,
for us?
there's a lot of things that are kind of waning on our economy now. We have the inflation, which moved up to 7.5%. That's the biggest number in like 40 years. The producer price index even over 9%. I think it was like 9.5 or something. So this is what you're going to see now. Many of these manufacturers, they've been kind of eating some of the costs to try to keep it down. They're not going to be able to do that much longer.
Yeah.
So they're going to be passing those prices on to the consumer. So you're going to see that. You know, we've really had a sputtering economy. So as people start going back to work, we're going to need more energy, you know, more oil. So, you know, we're looking at gas prices going into late spring, summer, you know, over $4 a gallon pretty much.
Wow.
So that's a huge number. And, you know, I've seen different numbers on inflation, who knows, but you're also looking at the Federal Reserve. They're going to start raising interest rates in March. So we don't know if they're going to start at 0.5% or 0.25% or what it's going to be. So there's a lot of uncertainty about that and how many rate hikes go along. To control inflation, you know, there's an old rule that says, hey, you know, your interest rate needs to be above your inflation rate. Well, that would put us over 7.5% interest. I don't know that the economy is going to like that.
Yeah, and those are tough things to sort of manage. You've got, you know, obviously the highest inflation in 40 years, as you mentioned, and then if we're also battling, you know, rising interest rates, that puts us in a tough position. That being said, we're going to go with the glasses half full today.
Okay.
We're going to talk positively.
Okay.
Because there are actually some things that are moving in the right direction. We talked a lot about, you know, the potential of a bear market and some stocks plummeting as much as 20%. There are some things moving up.
Well, let's look at it like this, Jessa. If I have my powder dry, and I've anticipated this a bit, then I have money to invest in the market. What better time to invest in it if we go back to our chart and we say, hey, what if we would have invested in the last start of the bull market and we ran it up for 13 years? Boy, how much money would we have made?
Right.
So we need to be ready for that to start the buying, you know, especially if we've stashed some cash away. With retirees, it's a little concerning because, you know, they're not saving, they're not working, so they're not contributing to retirement, 401ks, whatever it may be anymore. So their money has to last. So if they don't have it invested properly and they're going to take it all down, that's a little scary.
Right.
You know, we have a software that we use. It works typically for people that have over $500,000 for retirement assets or something to invest, and it's a risk assessment. And, you know, anybody that's watching the show, if you want to contact us, you know, we can have you come in. You'll also get mailers from us as we do local events. I would say be sure to come out and listen to some of those events. We go a little bit longer into some of the things we're talking here, don't have time to get into. So be sure and take advantage of that. But in the short time we have left, I would tell you some things that I've noticed that have been moving up in an inflationary environment.
Okay.
So in an inflationary environment, I've noticed that of course, the oil companies, I mean, that stuff's been moving up quite a bit. Commodities, of course. I've also noticed recently gold, you know, your gold, your silvers, your metals, those have been moving up quite a bit.
And that's one that we discussed on a previous episode about how poorly that had been doing. So that's interesting to see.
And now this is the year for it.
Yeah.
And also food stocks. So if we have food companies, you know, those stocks have really been moving up as well. So if you have any of those in your portfolio, put your eyeballs on them and see if I'm right. They've been moving up.
Absolutely. Okay, well, you heard it here on Lowcountry Money Talk. Lots of good expert advice, and you know where to find more. If you want to get that risk assessment and analysis, you can reach out to Revolutionary Financial Group. And if you want to watch more Lowcountry Money Talk, you can see it right here on WHHI. We'll see you next time.